Good morning, good afternoon, everyone. Whenever or wherever you're watching this video, thank you for taking the time out of your busy schedule to watch today's video. I hope everyone's having the best day or the best week of their life. If you found value and are excited about today's video, make sure to hit the subscribe button for more videos like this. Today's video is going to be about, are we already in a recession? Let me know in the comments below, do you think we're already in a recession? Does it already happen? And why are we in a recession? Let me know in the comments below, and let's have a conversation about this. Let's try to hit 7,000 subscribers in 7 months. With all that out of the way, let's get into today's video and talk about, are we already in a recession? So according to this article, yes, according to the Fed indicator with an excellent track record, we are in a recession. And I also believe we're in a recession. As you can see, stocks declining, high inflation, housing prices are ridiculous right now. And when you go outside, you can see the price of everything just going up. Food, groceries, gas, you name it, used cars. In the last article we're going to talk about is why Goldman Sachs or Goldman is still very cautious on the stock market. Well, aren't we all? I still don't believe that we hit the bottom. There's still a lot that's going on around the world, and we still haven't factored it in. The stock market is trading the future, so there's a lot of things that are still going to happen in the future. So I still think there's more room for it to go down, and it will. Also, keep in mind, one thing I forgot to mention earlier was we also have a lot of people losing their jobs. You can see companies laying off left and right. You have companies like Tesla, you have a lot of genetic companies, a lot of companies just around the world that are just laying people off and that are not hiring. So that's another indication that we're in a recession. And according to Rob, time to start preparing for a recession is now. I will leave this article in the description below so you can read it on your own free time. But it's just letting you guys know to be prepared if you already weren't prepared for a recession, because it's happening whether we like it or not, with all the stuff that the Fed did, all the money printing we did, and now all the unemployment, inflation, everything's just adding up. So here's some key facts according to the Forbes article that we have right here. The Federal Reserve Bank Thursday said the U.S. economy is shrinking by 1% in the second quarter, slipping into negative territory after economic data showed consumer spending dropped in May. The U.S. economy unexpectedly shrunk by 1.6% in the first quarter. The model long-term run track record is excellent, with an error margin of 1.2 points a month. So me being in real estate, should I wait to buy a home? That depends. Everyone's situation is different. If you just start a new job in a new place and you have a family and you have kids, then you probably need a home. There's also people that are paying too much in rent, and if the rent's really high and it's the price of a mortgage, why would you not go buy a home? Also, there's a lot of different things you can do with a house. But keep in mind, if you can wait when the housing market crashes and you can get a house for a nice cheap, or foreclosures start happening, that's your opportunity to buy a house for cheap. So no one can predict the future, so should you wait? Should you go buy a home? That all varies in everyone's situation. So let's talk about some economic indicators which matter for a recession. First off, we have the Treasury yield curve. U.S. Treasuries for longer than maturities usually pay higher yields, but not on rare occasions. Next, we have unemployment rates, which I just talked about, as we can see unemployment rising. Gross domestic products, durable goods orders, consumer spending is also down. And when you talk about consumer spending, we're talking about gross domestic products, employment, durable goods, income, and consumer confidence. And as you can see, all these are down. Then we have the Fed's increasing interest rates, which means less borrowing and more tightening. Anxious about a possible recession, some answers on layoffs, debt, and investing. So what's happening? A rising number of financial experts say that the US is headed into a recession, which is defined by two quarters with a significant decline in economic activity. Why it matters. Recessions are historically marked as a widespread layoffs, bankruptcies, higher borrowing costs, and turbulence in the stock market, which we're seeing all this right now. What's next? Gather facts to protect your financial position. No one can predict the future, and it's important to move calmly and think things through before you make any decisions. As inflation continues to soar and the stock market experiences its worst first half of the year since 1970, economics and financial experts worry about how they could be on the verge of a recession. First, what could we see in a recession? It's always helpful to go back and review other recessions and what their outcomes would have been in the past. If the Federal Reserve continues to raise rates to try to calm down inflation, we'll see even greater increase in borrowing costs for mortgages, car loans, and business loans. So even if you qualify for a loan or credit card, the interest rate will be higher than its prior year. Well, this is pretty obvious as we see the Fed increasing rates. It went from 5 to 6.28% recently, and they're probably going to plan another one in July, so it will increase even more. During recessions, as rates go up, as we're seeing right now, inflation cools and prices on goods and services fall, and our personal savings rate could increase. The keyword could. Should I expect layoffs? We're already seeing layoffs, so this is already happening. If you read the news, you can see companies laying people off left and right. Should I expect interest rates on my debt or loan to go up? If you're on a fixed rate, no. But if you're on adjustable or some other, yes. Should I stop investing in my 401k? If things are going down, they're cheaper, why would you want to stop investing? You're not going to be able to time the bottom, but keep investing, keep adding onto your position. Don't try to time the bottom, just find nice quality stocks, Johnson & Johnson, Procter & Gamble, Coca-Cola, Pepsi, Home Depot, Waste Management. I can go on for days. There's a lot of high quality stocks out there that pay dividends, and you don't have to worry about them going bankrupt or anything happening to these companies for a long time because people use their products daily.